Hello friends, I am Guna Mathivanan, Current Affairs faculty at Offices IAS Academy. I hope you are liking the budget basic series. So in my regular video series, I thought of explaining about some basics of budget because budget is being presented in the coming week. So you should be aware of some basic terminologies which will be largely used in budget, so that it will be easy for you to read the budget document. I have made 3 videos particularly on budget basics. One is on what is budget and the years mentioned in the budget. In another video I explained about the revenue component in the budget, then in another video I explained about the capital component of the budget. So in this video I will explain the most important term which is being often referred in relation with budget, that is fiscal deficit. Friends, even before going into fiscal deficit, we should know what is budget deficit, but even before that we have to know what is deficit. So deficit, when your expenditure is more than your revenue, then you will feel shortage. That shortage is called as deficit. So deficit is equal to simply my expenditure minus my revenue. When your expenditure is more, you will be experiencing deficit. Now what is budget deficit? Budget deficit is equal to the total expenditure minus total receipt. Total expenditure minus total receipt. Here total expenditure means what? My revenue expenditure plus capital expenditure minus what is my total receipts. Total expenditure I have given here. Total receipt is revenue receipt plus capital receipt. Right? Revenue expenditure plus capital expenditure minus revenue receipt plus capital receipt. So this is budget deficit. Friends, before going further, I hope you are able to recollect the budget components. So I was explaining about revenue budget and capital budget separately in 2 different videos. So I will just quickly recollect whatever we have discussed. So budget components, revenue component, and we have capital component. This revenue component is further divided into revenue receipt, revenue expenditure, capital receipt and capital expenditure. Okay, this revenue receipt I was dividing that into tax revenue and non-tax revenue. Okay, so examples for tax revenue, I said okay, we have direct tax and we have indirect tax. Under non-tax revenue I was mentioning about fine, fee, grants received, interest received, right? All these I was placing it under non-tax revenue. Then profits made by PSUs, right? Revenue expenditure I was saying salary given, subsidies given, transfer payments. I was saying about grants given, right? Then what will you do? Interest paid, interest paid on loan borrowed. So I gave a clue also, I remember. So if it is revenue component, it is one way transaction. If it is capital component, it is going to be a two-way transaction. Now coming to capital receipt. Here I was mentioning the points like loans borrowed, then I was referring to sale of assets, then recovery of loans, right, disinvestment proceeds, under capital expenditure. I was mentioning about again opposite, loans borrowed, right. So loans given, creation of assets, then repayment of loans, then here disinvestment means investments in shares. You can bring it under capital expenditure. Friends, here this capital receipt, if you take certain, this loans borrowed is creating debt, these three are not creating any debt. So I am classifying this, if you want you can take a screenshot of this, okay. So now capital receipt, I am classifying it further. I am dividing this capital receipt into debt creating capital receipt, and non-debt creating capital receipt. Certain capital receipt is creating debt. For example, loans borrowed. When you borrow loan, that is creating debt. But non-debt creating capital receipt, when you sell asset, that is not going to create any liability. Recovery of loans, disinvestment proceeds. Okay, just I am capital receipt, I am classifying it under two headings, debt creating capital receipt and non-debt creating capital receipt. Alright, so now coming back to our expression. So budget deficit is equal to revenue expenditure plus capital expenditure minus revenue receipt plus capital receipt. Now this capital receipt I have further classified into debt creating and non-debt creating, right. So let me slightly change the expression accordingly. Revenue expenditure plus capital expenditure minus revenue receipt plus debt creating capital receipt plus non-debt creating capital receipt. This capital receipt alone I am expanding it further. So this is budget deficit. This is budget deficit. Okay. Friends, when you are doing your budget, so when you are planning your budget, let us assume that I am planning my budget. Now my income, assume my income is 10,000 rupees. Okay. Now I will see all my expenditure. Okay, what is my expenditure? I have to pay rent. Rent is 2,000 rupees. I have to buy groceries. So groceries it takes another 2,000 rupees. Right. I have to pay EB bill or other miscellaneous expenses, maintenance, my fuel charges, etc. All those miscellaneous is resulting in another 4,000 rupees. So totally my expenditure is 8,000. My total expenditure is 8,000, income is 10,000, income is more. So, I have 2,000 rupees surplus, I have 2,000 surplus, but imagine a situation, now some emergency, or forget about emergency, my friend is getting married, I have to present some gift, my friend is getting married, getting married, I have to present some gift, so I have to buy some gift. So gift for my friend, I have to buy some gift. Gift is worth 5,000 rupees. I have to do that. Gift is 5,000 rupees. What is my total expenditure now? It is going to be 8,000, 13,000. So 13,000 is my total expenditure. 13,000 is my total expenditure. What is my income? My income is 10,000. So my deficit is equal to 10,000 being okay. 13,000 expenditure minus income, right? Expenditure minus my revenue, it is 13,000 minus 10,000, I get 3,000 rupees. So this is my deficit. So what I will do to meet this deficit, to finance this deficit, first I will consider selling my asset. Okay, I have ring, I can sell in the market, I can get some money. So sale of asset. So I am selling this ring in the market and I am able to get some 1,000 rupees. I am able to get some 1,000 rupees. But still, now sale of asset, this is an example for capital receipt. This is capital receipt. Okay. Through sale of asset, I am getting 1,000 rupees. Now still I have deficit. My deficit is 2,000 rupees. Okay, still I have deficit. So what I do? I am going to borrow. Now I am going to borrow. My borrowing is, I have to borrow 2,000 rupees. Only then I can meet the deficit. Okay. So my income is 10,000. So this income is going to be a revenue receipt now. Sale of asset is 1,000. That is capital receipt. The sale of asset is again capital receipt. My borrowing is again capital receipt, as we know. So my capital receipt is going to be 1,000 plus 2,000. 1,000 plus 2,000. So by selling my ring, I am getting 1,000. By borrowing some money, I get 2,000. So my income is 10,000. My capital receipt is 3,000. So I have now 13,000 in my hand. I have 13,000 in my hand. So my expenditure is 13,000. Now I have 13,000 in my hand. I can manage that month. But however, friends, these two cannot be equated equally, because sale of asset is not creating any debt. But this borrowing 2,000, that is creating debt. Sale of asset is not creating any debt, but borrowing is actually creating debt. Okay. So, let me write it here. In this example, the calculation which I have made. Okay. What is budget deficit? Budget deficit is equal to my total receipt minus total expenditure. What is my total receipt? My revenue receipt. Okay. My revenue receipt plus capital receipt. I'm sorry. Total expenditure minus total receipt. My total expenditure is my revenue expenditure plus capital expenditure minus revenue receipt plus capital receipt. Friends, what is my total expenditure? I said total expenditure is 13,000. Okay. So it is 13,000. Now what is my revenue receipt? What is my revenue receipt? It is 10,000. My revenue receipt is 10,000. Plus what is my capital receipt? Capital receipt is, I am further dividing that into debt creating capital receipt plus non-debt creating capital receipt. Okay. So 13,000 minus 10,000. How much I have borrowed? I have borrowed 2,000 rupees in the example. Okay. Plus by selling my asset, that is not creating any debt, I have 1,000 rupees. So now 13,000 minus 13,000, I get 0. So budget deficit is 0. So by selling my asset, sale of asset, by borrowing, I am ensuring that there is no deficit. I am ensuring that I am able to manage that month's expenditure. But however, managing by borrowing is not something which we can appreciate. You are managing the expenditure by borrowing, that you cannot appreciate. Okay, you are selling your asset and you are managing, that is okay, because you created the asset some time back, now you are selling, it is not creating liability. But when you freshly borrow, that cannot be appreciated, right? So here in this budget deficit definition, you may get 0, but since you are getting 0, you should not feel happy. That is why we came with fiscal deficit formula. That is why we came with fiscal deficit. Okay, budget deficit becomes 0, but someone comes and asks you, Guna, what is your salary? I say, sir, 10,000 rupees. Okay, what is your budget deficit? I say 0. Then okay, very good, Guna. You are earning 10,000 and you are able to manage all the expenditure in that, budget deficit is 0, great. This is not right. This is not right. I have managed my budget deficit by borrowing. But the budget deficit definition is not highlighting the borrowed amount separately. It is not highlighting it. When someone asks me what is budget deficit, I simply say 0. Right? So budget deficit cannot be a true measure to see my financial abilities. So we are going for another definition called as fiscal deficit. So what is fiscal deficit? So we are going for another definition called fiscal deficit, because this budget deficit definition, that also includes the borrowing part, the debt creating capital receipt part. Okay, that borrowing part, you are managing your expenditure by borrowing, that cannot be called as a performance. But as I said, someone asks me what is your income, I say 10,000. What is your budget deficit? I say 0. Then they will appreciate and they will go. They will not know the true picture that I have managed my deficit through borrowing. It is not clearly seen in the budget deficit definition, right? So we came with something called as fiscal deficit. Now what is fiscal deficit? Fiscal deficit is very simple, friends. I am giving you a very simplest way of explaining fiscal deficit. In many reference books available in the market, they will be giving some complicated expressions. Forget it. What I am saying is from NCERT. 12th macroeconomics NCERT is defining like this. Let us follow NCERT. It is very easy way of understanding as well. So fiscal deficit is equal to my revenue expenditure plus capital expenditure, right? So this part is completely same, minus revenue receipt plus NDCR. So what you have to do is, in the fiscal deficit definition, you simply remove this debt creating part. You simply remove this debt creating part from the budget deficit, then you will get the definition for fiscal deficit. So fiscal deficit is equal to revenue expenditure plus capital expenditure minus revenue receipt plus NDCR. Don't take the borrowing part. In the budget deficit, we will also take the borrowing part, but in the fiscal deficit, don't take the borrowing part. When you don't take the borrowing part, you get the definition of fiscal deficit. Friends, we will take the same example. We will take the same example. So here, this is budget deficit. This is budget deficit. What did I say? In fiscal deficit, you don't consider the borrowed part. You don't consider the borrowed part. So let us calculate what is fiscal deficit. So it is going to be 13,000 rupees. That is my total expenditure, minus I will take this 10,000 plus I will not include this 2,000. I will take this 1,000. So what happens? It is going to be 13,000 minus 11,000, I get 2,000. So if someone comes and asks me that, Guna, what is your income? I say 10,000 rupees, sir. Guna, what is your fiscal deficit? I say, sir, 2,000. What is this, Guna? You are earning 10,000 rupees and you are borrowing 2,000? You are borrowing 2,000 rupees to meet the expenditure? This is not fair. Now they are able to catch me. Now they are able to clearly assess my fiscal performances. Right? So, fiscal deficit, it will clearly highlight your shortage. It will clearly highlight the shortage which you will adjust through borrowings. Fiscal deficit will clearly highlight the shortage, and that shortage you will be managing through borrowings. Right? So, fiscal deficit can also be defined as FD is equal to is nothing but the total borrowing made. So, how much I am borrowing, friends? I am borrowing 2000 rupees, here I have mentioned, right? So, how much I have borrowed? I have borrowed 2000 rupees. The borrowed amount is being clearly expressed in fiscal deficit. So, what is the fiscal deficit value? That is the value government is borrowing to meet their expenditure. That is the amount government is borrowing. So, it is nothing but the total borrowing made by government to meet their deficit. To meet their deficit. They have a shortage, government has shortage, their government is getting all the revenue. Now, government is planning all the expenditure, shortage is there, government is selling their asset, they are going for disinvestment, they are getting money, but still there is shortage. Only in that situation they will borrow. How much amount is shortage, how much amount they are borrowing, that is given by fiscal deficit. Right? So, if you go by the formula, the budget deficit will have this debt part, in fiscal deficit you will not have the debt part, that is the difference. Right? The budget deficit you will have the debt part, in fiscal deficit you will not have the debt part. So, this is what fiscal deficit all about. Right? Very easy expression, but many students they get confused. Okay. So, look at the figures here. Look at the figures here. Fiscal deficit 7.96 lakh crores, that is close to 8 lakh crores. So, what does it mean in the previous budget, in the 2020-21 budget? What does it mean? Almost 8 lakh crores of fiscal deficit means that much shortage for which government has no choice other than borrowing. That much shortage for which government has no choice other than borrowing. This is fiscal deficit. Right? Your NCRT is defining fiscal deficit in 3 ways. So, first one I explained, FD is equal to total expenditure minus revenue receipt plus non-debt creating capital receipts. Another way is simply fiscal deficit is equal to the total borrowing made at home, borrowing made from RBI, from abroad. How much you have borrowed to meet the deficit, that borrowing amount alone is another way of explaining fiscal deficit. Another way of explaining fiscal deficit is, this fiscal deficit can be explained in another way as well. So, by simply rearranging. So, what is fiscal deficit? FD is equal to total expenditure minus revenue receipt plus non-debt creating capital receipt. What is my total expenditure? Revenue expenditure plus revenue receipt minus revenue receipt plus non-debt creating capital receipt. So, what I am doing, I am opening up the brackets. So, revenue expenditure plus revenue receipt minus I'm sorry. Revenue expenditure plus capital expenditure minus revenue receipt plus non-debt creating capital receipt. I am expanding the brackets. So, revenue expenditure plus capital expenditure minus revenue receipt minus non-debt creating capital receipt. I am rearranging, I am bringing this together. Okay. So, revenue expenditure minus revenue receipt plus capital expenditure minus non-debt creating capital receipt. So, instead of revenue expenditure minus revenue receipt, right, I can simply write it as revenue deficit. So, revenue expenditure minus revenue receipt is nothing but revenue deficit, right? It is natural, right? Revenue expenditure minus revenue receipt is nothing but revenue deficit. So instead of this RE minus RR, I am using RD. I am using RD, revenue deficit. Then plus capital expenditure minus NDCR. So this is one way of defining fiscal deficit. Fiscal deficit formula can be written like this as well. Simply I rearranged certain the components involved here, and we arrived at FD is equal to RD plus capital expenditure minus NDCR. See, FD is equal to revenue deficit plus capital expenditure minus non-debt creating capital receipts, right. So in these three ways, your 12th macroeconomics NCERT defines fiscal deficit. We will always follow what NCERT says. Many times UPSC has asked questions based on fiscal deficit in your prelims by rearranging the content given here in the form of match the following, something like that. If you are very clear with the basics, you can easily answer any question based on fiscal deficit, right friends. I hope the video was useful. I have created a MCQ based on this discussion. Find out the correct answer and given the comment section. Here I have given the features of my exclusive current affairs course. What I am doing in YouTube is different. This current affairs course is different. In YouTube video series, I am trying to cover one topic every day. This is completely different. The program which I am given here is completely different because I am getting many queries regarding this program. I have clearly mentioned the features here. If you have any doubt, you can give a call to this number, right friends. So I hope you like this initiative. I will be very happy to see your feedback in the comment section. Tomorrow I will meet you with another exciting budget basic topic. So we will discuss about other deficits tomorrow. Till then, bye, take care.